Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering categories of gifting that don't apply to the annual and lifetime gift tax exclusions. Spiedel's quarterly federal tax update gives you a manageable way to stay informed through live 2-hour sessions delivered once a quarter. Through December 30th, you can get 5 sessions for the price of 4. Just use promo code BONUSQ and the extra session will be added when the order is processed. For details, go to Spiedel.com and click Webinars. The annual gift tax exclusion amount is $19,000 for 2025 and 2026, or $38,000 for married filing joint taxpayers, and the lifetime gift tax exclusion amount is $13.99 million for 2025 and $15 million for 2026. However, there are some categories of gifting that allow for unlimited gifts that don't apply to the annual or lifetime exclusions. Taxpayers can pay an unlimited amount of tuition on behalf of another individual. Both full-time and part-time students qualify. However, the tuition has to be paid directly to the qualified educational institution. If the taxpayer gifts the tuition money to the individual who then turns around and uses it for tuition, then it's treated as a regular gift that would be subject to the annual exclusion and lifetime exemption. Also, only tuition payments count, so if the taxpayer pays other expenses like room and board, books, supplies, etc., those are considered regular gifts. These direct gifts can be combined with regular gifting to maximize the amount passed to the donee. For example, you could pay a grandchild's tuition bill and still gift an additional $19,000 for 2025 and 2026. Medical bills paid directly to the medical service provider are also exempt from the annual and lifetime gift limitations. Like tuition, the amount paid on behalf of another individual is unlimited, but the payments can only be for certain medical costs. Costs that are not qualified medical expenses, like purely cosmetic procedures, wellness programs, and elective procedures, are excluded. Qualified medical expenses include costs like hospital bills, surgeries, dental procedures, long-term care, and insurance premiums, among others. For gifts to a spouse not to be counted toward the annual and lifetime exclusions, there are 3 requirements. The donor and donee have to have been married to each other at the time of the gift. The donee has to be a U.S. citizen, and the property interest transferred can't be a terminable interest. So no gift tax marital exclusion is allowed unless the gift to the donor's spouse transfers full ownership or its equivalent. If the donee spouse is a non-U.S. citizen, there is a separate annual exclusion amount of $190,000 for 2025 and $194,000 for 2026. Gifts to IRS-recognized charities, for example, qualified 501c3 organizations, are not subject to gift tax. However, gifts to other types of nonprofit organizations, like 501c4 or 501c6 organizations, are treated as regular gifts, as are gifts made directly to a personal fundraiser through a platform like GoFundMe. Also, donations to donor-advised funds have no limit and allow taxpayers to front-load their charitable contribution tax deductions into the year when the taxpayer makes the contribution to the donor-advised fund, even though the money can be distributed to charities over multiple years. Additionally, taxpayers can donate appreciated assets to a donor-advised fund and benefit from claiming a deduction for the full fair market value of the assets donated without recognizing income on the appreciation. Contributions to 529 accounts are treated as gifts to the recipient, but the growth from the account is never taxable as long as the money is used for eligible expenses. 529 accounts are most beneficial when the money has a chance to grow tax-deferred over a longer period of time. So as the child reaches the age where they're going to start using their 529 funds, it's best to just make the tuition payments directly to the school so that you can save the gift exclusion for later. Stay up to date with tax law changes as they happen with a subscription to Spiedel's Federal Tax Letter. You can find out more and download a sample issue at Spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.